Welcome. Let's get right into it. Today, we're unpacking the one question that seems to be on everyone's mind. How on earth are the markets hitting all-time highs when the headlines are so full of uncertainty?
And this really gets to the heart of the matter, doesn't it? It's a real paradox for investors. You see all these cautionary tales in the news, yet the stock market just keeps climbing. So what is actually going on here?
You can think of it as a tale of two different stories being told at the same time. In one corner, you've got some serious negative signals, things like ongoing geopolitical tensions, gas prices that make you wince at the pump, and a general feeling that consumer confidence is a bit wobbly. But in the other corner, you have the market reality. The S&P 500 is smashing records. And listen, the path to this new peak has been anything but a straight line. It's been a bumpy ride. In fact, just last month, we saw the market take a pretty scary dip, almost 10%. But then, it just rocketed right back up. A classic, sharp recovery that really paid off for investors who didn't panic and stayed the course. So what's the secret sauce? What's the real engine behind this incredible resilience? Well, it all boils down to one single, incredibly powerful factor: corporate earnings. The simple truth is that U.S. companies are making a lot of money right now, and that profitability is strong enough to power through a lot of those headwinds we see in the news.
It helps to remember that stock prices are really built on two main pillars. First, you've got the hard numbers, right? The actual corporate earnings, how much cash these companies are generating. And second, you have investor sentiment. This is the story, the feeling, the vibe in the market about the future. It's what determines how much people are willing to pay for every dollar of those earnings.
And that first pillar, the earnings one, it is looking incredibly solid. Projections are showing a 14% jump in profits for S&P 500 companies in the first quarter, year over year. I mean, that's not just good, that's a huge surge that gives the market a really firm foundation to stand on.
And you can see how that strong profit growth directly fuels market performance. It's what pushed the S&P 500 to a brand new record close just this past Wednesday. This isn't just some abstract number, it's a direct reflection of the market's deep confidence in corporate America's ability to make money. We've actually seen a fascinating shift in how investors are thinking, too. Initially, when all the talk of conflict heated up, the market's first reaction was fear. We saw that dip. But as it became clear the situation was contained, you could literally feel the focus pivot, away from the scary headlines and right back to the boring but powerful fundamentals of strong earnings.
And the early data is totally backing up this shift. So far, more than 15% of the big companies in the S&P 500 have reported their first quarter results. And of those, the vast majority have come in ahead of what analysts were expecting. So this isn't just wishful thinking. There's real, tangible proof of that underlying strength.
Okay, so that's the story so far. But what about looking ahead? Well, it seems this isn't just about what happened last quarter. Corporations are actually signaling that they expect this resilience to continue, with many giving optimistic forecasts that seem to fly in the face of all those broader economic pressures.
And we're hearing this confidence straight from the top. Take Bank of America's CEO, Brian Moynihan. He recently pointed to solid consumer spending as a key reason for optimism. And that's a metric everyone watches, because when people are spending, it's usually a great sign for future corporate profits.
And this positive vibe isn't just isolated to the banking world. We're seeing it across the board in totally different industries. You have a travel powerhouse like Delta Airlines and a consumer goods giant like PepsiCo both saying, yeah, the outlook is pretty good. That kind of consistency is really telling.
Now, of course, no briefing would be complete without talking about the flip side. We have to be clear-eyed about this. Because while that earnings story is fantastic, this optimistic path forward is definitely not a sure thing. There are absolutely some significant risks still lurking out there.
Two risks in particular could throw a wrench in the works pretty quickly. First, any serious breakdown in the U.S.-Iran talks could cause that investor sentiment we talked about to turn negative, and fast. And second, high oil prices that stick around for a while. That's a double-edged sword. It directly squeezes profits for companies, and at the same time it eats into consumers' budgets, leaving them with less to spend.
So here's the bottom line. For now, powerful corporate profits are acting as the high-octane fuel for this market rally. But those risks we just mentioned are very real, like a storm gathering on the horizon. The trillion-dollar question that we're all left with is this: just how long can this engine outrun the storm?